Welcome to the Crypto Teacher. And you know I come back with that video just to make you think.
Don't forget to like and subscribe to the channel.
And guys, we have Michael Saylor on CNBC speaking about MicroStrategy like he's the CEO. And remember guys, when you see MicroStrategy, you should see Morgan Stanley. And we know MicroStrategy doesn't hit any type of earnings numbers. And we know when Michael Saylor became the spokesperson for Bitcoin because he made a comment about the C word and it didn't go over well.
MicroStrategy really had this dual strategy. It's both an operating company focused on business intelligence and what some analysts would call a modestly leveraged investment play on Bitcoin. Does the marriage continue to be worth more than the sum of the parts?
Yeah, absolutely. The operating company provides diversification for investors versus the volatility of Bitcoin, and it also allows us to borrow money very cheaply. Our blended cost of capital is like 1.5%, and we're able to invest that money into Bitcoin. And on the other hand, our Bitcoin investment Bitcoin itself is up 145% since we started buying Bitcoin. And that Bitcoin position creates the volatility in the stock that allows us to borrow and raise capital cheaply in order to buy more Bitcoin and grow the business.
Now, I know you retired one loan earlier, I guess, last quarter, and brought your leverage down. When I hear you talking about being able to borrow cheaply, are you doing that right now?
No, we're not borrowing right now, but we go through successive cycles of leveraging and deleveraging. We've been deleveraging now, and generally our decision about whether or not we leverage or deleverage is a function of the market opportunity and what we think is most accretive for our shareholders. There's a growing consensus that Bitcoin is a unique and valuable international asset, and that's being endorsed by politicians. It's being endorsed by regulators. It's being endorsed by investors. You're hearing money managers like Larry Fink say this. And that has created a change in sentiment. You know, the odds of spot ETF being approved were 1% 6 months ago. Then they went to 50%, and this morning they were 65%, according to Bloomberg analysts. So that's really driving the near-term sentiment. But plus the fact that there's so much chaos in the crypto industry, Bitcoin is emerging as the safe haven institutional asset if you want to play this space without trying to parse through the politics, the legal, and the regulatory complexity. Well, I think a spot ETF is great news for the space. Bitcoin you could think of as this beautiful house in a scary neighborhood that you have to pay for in cash, takes a year to buy, and you can never rent it. The spot ETF is like that same beautiful house in a nice neighborhood, and you can buy it tomorrow, no money down, and you can rent it and refinance it from your bank. It's not a threat to MicroStrategy. MicroStrategy is like that beautiful house with 10,000 acres of ranch land behind it that generates cash flow, that has a management team that can borrow money at 1-2% interest in order to develop the land. So we offer yield and we offer leverage through active management, which is unique for a set of our investors. We obviously don't have room in our capital structure for tens of billions of dollars of sovereign wealth or major hedge funds, so they need a spot ETF in order to take a position in the space. Now, I think looking back 3 years is very clarifying. 3 years ago, Bitcoin was about 10,000. And so if we look at the 3-year chart from August 10th of 2020 to today, Bitcoin's up 145%. The S&P is up 37%. The S&P is the cost of capital. Gold is down 3%. Bonds are down 18%. MicroStrategy is up 254%. And our enterprise value is increased by a factor of 10 by, $8 billion or something. So we're glad we adopted Bitcoin. We would say that Bitcoin is returning 4x the cost of capital. And if you're not getting 37% gain in those 3 years via the S&P, then you're not keeping up with the cost of capital.
Now, guys, we have Jay Clayton on China playing the Hegelian dialectic. And we know Jay Clayton could have brought in crypto regulation. But instead, he kicked the can down the road to Gary Gensler. And Gary Gensler has been kicking the can down the road, but we know why. Because they know the fourth industrial revolution is about to rise in the emerging markets. And Hong Kong is leading, but we know China is using Hong Kong as a straw man. And they bring up Henry Kissinger and Oppenheimer. And those who have my book understand history. If you have my New World Order book, you definitely understand history and you know how to connect the dots. But guys, we know when it comes to our corporations and our banks, we funded China from the beginning. And Jay Clayton said out his own mouth, you know, I brought you a video of that. We know these corporations wanted cheap labor. Guys, if they can't get slavery, they get the closest thing to it. Pay your pennies on the dollar. And then, guys, we have Janet Yellen on Fitch. And we know Janet Yellen and Gary Gensler are the chess pieces that land us in this fourth industrial revolution. Don't forget, Janet Yellen used to run the Fed, but she disagrees with Fitch downgrade. But guys, we know that America's credit should have been downgraded a long time ago because we know the Fed is holding everything up. But now these other countries, the BRICS nations, are about to get off the dollar. And we know CBDCs and stable coins are about to take over if the sheep don't wake up. That programmable money telling you what, where, and when and how to buy, and you have 3 to 6 months to spend it or poof, it's gone.
And the robots, algorithms, and drones take over the economy. And the sheep go in the metaverse.
And remember, the Cryptoteacher told you, because he knows when it comes to the New World Order, it's all planned out. You have a wonderful day.
But BlackRock, crypto, Fitch, downgrades, everything. But here's where we're going to start the conversation, because BlackRock is under some fire in Capitol Hill. The House Select Committee on China now reportedly launching a probe into the world's largest asset manager. Lawmakers alleging that BlackRock is facilitating investment in Chinese companies accused of bolstering China's military and violating human rights. For more, I want to talk to Jay Clayton, who's here at the table, of course, at Apollo, non-executive chair and a CNBC contributor. Good morning.
Morning.
Okay, so what do you make of this? You've been you've been a China hawk. Is that fair to say?
That is. Yes. Let's just go with yes.
Just go with yes. Okay. So what do you think is really happening here?
Well, this committee, it's a bipartisan committee, which is rare right now. We'll come back to what partisanship has meant for our debt rating, but it's a bipartisan committee. It's not a legislative committee. It's a committee designed to bring out information. And this is one step in bringing out information. Let me take this to just a little bit higher level.
Yep.
We're into the presidential cycle, okay? What are the big issues for kitchen table Americas in this cycle? We've got abortion, okay, put that to the side. We've got the border, put that to the side. Maybe. 3 big ones that all relate to China. Climate, you're not going to solve climate without dealing with China. We can now all accept that. Okay? Mm-hmm. The economy, the strength of the dollar, and national security. Those three big ones, all depend on our relationship with China. We talked before about conjoined twins in our economy with China. China's economy doesn't look so good right now. I think one of the headwinds for the U.S. economy is where China's
okay, so, but then what are you arguing should happen here? Because you've been hawkish, as I said, about China, about the national security issues, about some of the companies and how to deal with them. If we have to act, if we are twins, conjoined twins, mm-hmm. What's that relationship supposed to look like? Well,
it's that you can't deal with those things in isolation. You can't deal with national security in isolation from the economy, and climate being a political issue in isolation from. All of the candidates need to be able to deal with those issues in an open forum. This committee, and let's go back to your question right. about MSCI and BlackRock, what they're saying is, okay, when I invest in an index, when I invest in a global index, how much of my money is going into the Chinese public capital markets, and what is that money going to finance? That's a very good question when those 3 big issues for Americans all depend on our relationship with China, which is not a good one.
But then what's the answer?
What's the answer?
We just had the regulator on about commodities, and specifically we're talking about crypto. Mm-hmm. And then the question is, do you regulate it? Do you not regulate it? How do you regulate it? How do you regulate something that's in another place?
Okay, first thing toward regulation is transparency, right? One of the things that I saw right. Russ, and Russ was saying, what's my biggest frustration with crypto is that I'm not getting transparency onshore and offshore in the gray areas.
Right.
Transparency on our dealings with China. You can't solve these problems until you understand them. And what's my view? We are too dependent. I think everybody agrees with that. We can't have a sharp decoupling, but and our economic strength.
That's okay. We can't have a sharp decoupling. That's because that's the point I come back to all the time. How do you do it gradually? How do you do it softly? And if like, what's the definition of a sharp decoupling? Because I do worry about global security if there is no connection between the two countries. Because I think the Chinese have done a lot of pretty shady and awful things along the way. You watch Oppenheimer and you think, wow, there's a problem with us having no connection to another superpower on the globe.
Look, we have. I'll give Henry Kissinger credit for this. We have something that has never ended well in the past. We have a superpower, the United States, and a rising power. When you have a superpower and a rising power, generally that ends in conflict. Are we going to use the phrase we use too much? Are we going to be able to land the plane of a rising power and a superpower?
Right, but then we had Nikki Haley sit at this desk a week ago, and you would have thought that she was prepared to declare war on China. I mean, I say this because there's a lot of people who are in Washington today who they are all for the decoupling.
Okay, what are our assets? Start with what our assets are to solve this. Economic strength. Okay, we should be focusing on economic strength. We have better relative economic strength right now. One of the issues is how are we doing going forward? Okay, we do have rising debt and deficit.
But what do you make of the rhetoric? I'm just curious about the rhetoric piece of this because it almost feels like it's the U.S.
simple.
even more than in China right now.
The rhetoric is too simple.
It's too simple.
It's too simple. Okay, the this or that.
Right.
That's too simple. We need to continue our military strength. We need to continue our economic strength, and we need to diversify.
Right. Talking about, because it is our top story, Fitch downgrading the U.S. rating, citing what they're calling an erosion of governance. Emily Wilkins joins us now with more. Good morning to you.
Good morning, Andrew. Yes, well, some shocking news yesterday, at least for some of those in the Biden administration, seeing that downgrade in the U.S. credit rating from a AAA to AA+. This is only the second time that the U.S. credit rating has been downgraded like this, and Treasury Secretary Janet Yellen is quickly defending the Biden administration, saying that the data that Fitch is using was outdated data. She called the numbers arbitrary, and it's not only Yellen who is really pushing back against these numbers. Other Democrats are also pointing the finger at former President Donald Trump and Republicans, saying that they are the ones to blame. Take a look at this statement from Richie Neal, top Democrat on the Ways and Means Committee. He said that the GOP is responsible for the downgrade and that the American people will be forced to bear the consequences from the debt crisis and tax cuts for the wealthy. Although, if you look in Fitch's report, they've said that the recent debt ceiling crisis was really only the latest incident in dysfunctional government. They said there's been, quote, steady deterioration for 20 years in the U.S.'s government. And other factors that contributed to the rating include rising deficits and the government's inability so far to deal with growing costs of Social Security and Medicare. Plus, there are continued recession fears.
Treasury Secretary Janet Yellen responding to Fitch's downgrade of the U.S.'s credit rating, saying, quote, I strongly disagree with Fitch's decision. The change announced today is arbitrary and based on outdated data. Fitch's quantitative ratings model declined markedly between 2018 and 2020, and yet Fitch is announcing its change now, despite the progress that we see in many of the indicators that Fitch relies on for its decision. Many of these measures, including those related to governance, have shown improvement over the course of this administration, with the passage of bipartisan legislation to address the debt limit, invest in infrastructure, and make other investments in America's competitiveness. Again, this is the statement from Janet Yellen, Treasury Secretary, on the heels of that downgrade.
We're going to a different economy, and we're going to be learning more about that as we go. But clearly, we're learning that things can be done from remote locations. We're learning that technology can replace people even more than we thought.
We're not going back to the same economy. We're recovering, but to a different economy, and it'll be one that is more leveraged to technology. And I worry that is going to make it even more difficult than it was for many workers.
In Silicon Valley, and my friends who work in technology know that what we did to the manufacturing workers, we are now going to do to the retail workers, the call center workers, the fast food workers, the truck drivers, and then even bookkeepers, accountants, insurance agents, lawyers, and on through the economy. So what happened to the manufacturing workers is a very clear sign.
And so we'll import Chinese-based CBDC technology. So it's going to be CBDC in a box provided to you by the People's Bank of China.
But every stock, every bond, every currency, every commodity, every piece of art, every private business, every piece of real estate will eventually be a token on a blockchain, an entry on a ledger, permanent and immutable. We will have truth instead of trust, and we will save over $7 trillion a year. 6 to 8% of global GDP is wasted by the friction of the trust industry that's necessary when you have dual entry accounting. With triple entry accounting, which is what a blockchain is, we get rid of all of that friction. It's a beautiful future.
Like what you see in China and their social credit scoring systems, right? If we get identity wrong, it could be a tool to enslave humanity. And if we get it right, it could be a tool to liberate humanity. And as an American, I'm obviously rooting for the one that's on the side of freedom.
Bitcoin is an international asset. And also, I do believe the role of crypto is, it's digitizing gold.
I actually believe this technology is going to be very important. Look at it. We have been part of the huge revolution in investing through ETFs. We believe that ETFs will be changing the whole way we invest. Many people still use it as a means, people are investing it for indexing. No, the majority of people who are putting money in in ETFs are active investors that are buying exposure. The entire bond market is being transformed as we talk right now. I believe the next generation for markets, the next generation for securities will be tokenization of securities. And if we could have that distributed ledger that we know every beneficial owner, every beneficial seller, we all have our code of who's buying, who's selling, instantaneous settlement. And think about it, it changes the whole ecosystem.
Crypto Teacher and the new World Order book, plus the 3 kids books. It's time to re-educate. Also, new to cryptos, Coinbase, Bitrue, Binance. Do not forget book links and crypto links are in the description. The stock channel, guys. Don't forget to go like, subscribe, spread everywhere. You have your Kobo, your chip stocks, your banking, your gaming. While everybody's sitting at home, get home stocks, the Seaver, the biotech stocks. And while everybody's at home wishing, they were still getting that free money. What are they doing? Drinking and smoking weed. Don't forget about those stocks, and you have a wonderful day. The most powerful person in the world is the storyteller. The storyteller sets the vision, values, and agenda of an entire generation to come. Steve Jobs. And guys, I truly believe in this. When you look at the New World Order, they're the storytellers. And that's the reason why I wrote my New World Order book. But guys, now it's time to change the current generation. And I wrote 3 kids books. I love the Trinity because I understand the power that's in it. So I have 3 books. We have an opportunity to change the generation, to educate. Not just me, but I want to show you that I take action on a daily basis. And I want you to take action on a daily basis. Whether it's your job, whether it's in your community, we have an opportunity right now to educate the masses. I posted this on my Twitter account. Please share, but this is a short clip of the 3 books. There's going to be a clothing line and action figures. Please get these books for your kids, nephews, cousins, friends, so therefore we can start the re-education now. Because as we see, the 4th Industrial Revolution foundation is definitely here. Robots, algorithms, drones, taking humanity out the picture. We have to re-educate. But let's get into the video.
Part 1. King Joshua and Grandma Tam save the village. Part 2. King Joshua and Grandma Tam save New York. Clothing Stories 3. Part 3. King Joshua and Grandma Tam goes to China.
It's mandatory to get part 1, part 2, and part 3 of this series. It's time to re-educate Generation Z.